There are 96 new insider trades. Almost every single one is going to be totally useless, but we'll look through them all to find those handful that could be high signal and help us outperform. As a reminder, we are looking for those unscheduled and abnormal insider trades, particularly from insiders that have a history of success. And then if we're seeing multiple insiders buying or selling, that's also a bonus. And some price action if we're buying the dip or selling the rip, that can make it more interesting as well. Taking a look at the day's number of trades, we can see basically no purchases. Very, very few purchases, kind of a normal number of sales from the last few days. But obviously that means we're going to come in very, very low here with only 3% of the total insider trades being buys. Now we do filter out some of the stuff here, so we'll filter out like employee stock purchase plans, super small buys or sells, tax sales, some of those kind of things. But overall, you'll notice of, the trades that aren't kind of those already pre-scheduled tiny trades, very, very few coming in were buys. Again, I don't think it's particularly unusual. You can see back here, back in July right before earnings season or going into earnings season, we also saw some really, really low days in terms of the percent of trades that were sales. So nothing too unusual to notice here. You'll also note that most of these trades would have happened before, most likely at least before the Trump came out on with the Friday kind of dump and the China tariff stuff. So don't think it's in relation to that either, though as we go through this week, now Columbus Day, actually they don't file insider trades, but then as we go later into the week, we'll start to see if there's any insider trading in relation to some of those China tariff stuff. So let's go take a look now at the insider trades. We'll start with the buys first. Take a look. That's not what I need to do. Purchases here, and then we'll filter by or sort by transaction value, get that out of the way. As you can see, very, very, very few purchases. Some of these, we got a few really tiny ones down here that are all under a few $1,000s. We have one up here that's part of a purchase agreement, so all of those not particularly interesting. But right off the top, I'll see $150 million purchase, which would immediately stand out. However, as we can see here, a pre-funded token warrant is what this is going to say. I don't know if I hover if it'll tell me. Guess not. But if we click into this link here, pre-funded token warrants for 5.9 million shares at $25.19 a share. That's what this was trading at. The warrants are not exercisable until approved by issuer's shareholders, and they terminate upon the full exercise of the warrant. So what is going on here? Let's go take a look just to see what exactly is Flora Growth Corp. What do they do? So we can see obviously very poor stock performance, down 70% in the last year, down 30% in the last month, trading below the 200-day, nothing looking particularly good there. If we go here, they engage in the growth, cultivation, and development of medical cannabis. But we will notice, if we go take a look at press releases, what's going on here, they announced the first purchase of Zero G, the fuel of the Zero G decentralized AI network. They are set to rebrand as Zero Stack, the first public company to offer exposure to decentralized AI through the accumulation of Zero G token, the native cryptocurrency of the distributed blah, blah, blah. So what appears to be going on here is that this used to be a cannabis company, now pivoting to a crypto treasury company. As you guys know, I do have a small sleeve in my portfolio in some of these crypto treasury companies, solely because we're in such a crazy bullish market right now that these crypto treasury companies will tend to pop a ton on their announcements of being crypto treasury companies or any related announcements. So I just have a tiny portion of my holdings in some of those plays just to catch some of those pops. This could be something that's interesting, but we're going to start to notice a bunch of red flags here. So one being the market cap, $12.85 million market cap, and yet this says 5.9 times 25 gets you up to that $150 million amount, which obviously is infinitely higher than the market cap here. We'll also notice this comes in at 5.9 million shares. If we go take a look at the share count here somewhere, if I remember where to find it, shares outstanding, less than 600,000. Supposedly there's nowhere near 6 million shares even available or traded right now. And the stock's worth nowhere near $150 million. Because what would happen here is if we go read the 8K, which we don't have to do on here, but the CEO here is selling that Zero G token to the company here, Flora Growth Corp, for $3 a share. So he was basically sold them $150 million worth, or supposedly, that's what seems like happened. Sold them $150 million worth in order to get these token warrants, which basically he doesn't have to pay any to exercise these. I mean, I guess what he paid was technically those Zero G tokens that he gave the company, but the shareholders would have to approve him being able to exercise this $150 million. However, obviously, once you exercise nearly 6 million shares, which is 10x the total number of shares, it's going to cause the share count to go way up, which is most likely going to cause the stock price to come way down. So you have a massive dilutive overhang here. Whenever those do get exercised, it's going to cause massive downward pressure on the stock price, which is why he's very likely never going to get anywhere near $150 million worth of those warrants, because as he exercises them, the stock price is going to just go down as more shares enter the market. So there is still, you still have a chance here for some press releases to come out to get some positive news about the company and get the share price to shoot up. But, especially now with that Friday dump, I think there's a little more concern around crypto related stuff. But also you have that overhang of those 6 million shares, plus they actually had given out a few more warrants. So there's more like over 7 million warrants out there. Once those warrants start to get exercised, it's going to be massive downward pressure on the stock, and it's probably going to cause the stock price to tank. So my hunch would be that their hope is that they're going to be able to pop the stock price up with this crypto treasury stuff to get the stock price to pop way up, and then they can massively dilute the stock with those warrants coming out. But in the end, the stock price will have gone up enough that by the time they dilute it with the warrants, they'll still come out ahead. But you're just playing a risky game there with a terrible company. So it's more of an explanation why I don't personally find this one quite as interesting as some of the other crypto treasury plays that I might be holding right now. And then also just kind of explaining what this $150 million and how it's not actually quite lined up with what's going on there. Now, another one that's pretty interesting here is this Cullinan Therapeutics. We've got Links One Capital Management buying the stock here. If we go take a look at what is going on here, we'll actually see that they bought two different purchases here kind of at the same time, 3.59 million, 6.23 million, all common stock in this biotech company. They're the only ones that's bought the stock since way back in February, it looks like, or those might have been sales actually. So yeah, so they're the first one to buy the stock in a very long time, all the way since back here in 2022. If we take a look just at Links One Capital here, we can look at some of their track record. They actually don't have a particularly good track record as we look across some of their historical purchases. Negative 50% 6-month returns, slightly positive 1 month and 3 months, but overall not particularly good returns. The only ones that are doing okay right now are some of these that their most recent purchases here in 2025 have actually turned out all right, but all of their ones before that, the stock was down a lot after their purchases. So not really a particularly good track record, probably actually slightly negative. So just from like an insider trading standpoint, this is kind of interesting because it's a $9 million purchase in a biotech company, but this insider themselves, 10% owners tend to be a little lower signal, and then also they just don't have a good track record. So overall, not the most interesting insider signal there. The only thing that does start to make this interesting is we kind of look at, a clinical stage biotech company, $440 million, obviously trading well below the 200-day, down 50% in the last year. However, you can see this spike starting to come up here, which we'll notice. Let me get time frame here. Over the 3 month, just over the last week, basically, the stock has now gone from somewhere just under 6 to now over 750. So we're talking, a good 30% or so, or 20 to 30%, rise there. That is certainly notable. Closer to 30%, I guess, yeah. So we're starting to see some strength here, which is kind of interesting, especially in biotech stocks. And it gets a little more interesting when we go look at, let's look at a transcript, might actually be the best one. If we go look at not that one. If we go look at their most recent healthcare conference about a month ago, let's look at some of their strategic priorities and growth drivers. That's not actually what I care about. Where do they have? Are they going to tell us? Recent business trends. This is probably the best. So they have over $500 million in cash, which is fine. Not really what I care about so much. So some of their studies going on here. CLN 978 lupus study. The data was delayed from Q4 till the first half of next year. This was due to enrollment challenges, nothing to do with the actual study itself. So here's an upcoming catalyst. First half of 2026, we're going to get some data on this drug. They also have an RA study data timing, also expected to come in 2026. So now we've got two data points coming in 2026, both catalysts in the first half of 2026. And then we've got this, I don't know how to pronounce that, so I'm not going to try, zipalertinib NDNA submission, which is going to come by the end of 2025. So there could be a little bit of intrigue there as well. So we have a few different data readouts or submissions going on that could be potential catalysts. So that's the only thing that starts to make this, just a little bit interesting. We also have up here actually a different study, which I believe this one is related to Progress Oncology. Maybe this is actually a different program that I don't know why they didn't mention down here. But then you've got another one. This is actually the highest potential near-term catalyst is the CLN 049 data expected in Q4 of 2025. So we have quite a few, especially 3 different data readouts coming in between. We have a 1 in Q4 2025 and 2 in the first half of 2026. And then we also have this submission, which, maybe will be something, but probably a little less interesting. So those are all definitive catalysts at this company. And then we've got that insider buying. And on top of all of that, we have this price action here, which could hint at, like a sudden uptick here might start to hint at some people being, either some news leaks coming out or just some people becoming quite confident in some of these data readouts coming out. So it's an interesting price action for sure. Overall, so like I mentioned, kind of the 10% owner buying in the insider trade itself, not particularly high signal. I tend to avoid most 10% owner purchases unless they happen to be super good returns historically, which is obviously just not the case here. They don't have very good returns at all. They actually have pretty bad returns, I'd say. So this one's kind of a toss-up because you do have the insider buying and you do have some of those readouts coming out, the catalyst, which you would like to see. But at the same time, the 10% owner is just not typically what I'm interested in. So I think that's kind of up to you where you'd fall on that. It is an interesting play. It is interesting the buying. Any buying before catalyst coming out in biotech is interesting, but I think this one's a little bit tougher of a play just because it's a 10% owner without great return. Moving on to Adicet Bio here, we've got OrbiMed, but this is just a purchase agreement. Again, this is a 10% owner making a purchase agreement. That's two things that we tend to avoid. Don't care about 10% owners. 10% owners tend to underperform, and then purchase agreements also tend to be lower signal. So both of those we just don't really care all too much about. And lastly, the only other interesting one on here might be this AngioDynamics. So we can go take a look at James Klenner here and see what he has going on. If we look historically, his returns okay. So he's got a decent returns, but his win rate's staying pretty low, which means he's probably boosted by a few just pretty big wins. So this one's going to give him, like 100% or so. I think when you look at the chart like this, one of the downsides, one of the things with these kind of set timeframes here is that occasionally it'll work out. When you have hundreds of thousands of insider trades over, however long a history, or even just each week you tend to have about 1,000 plus insider trades. You're just going to occasionally get people that, the timing just works out where the, 1 month, 3 months, 6 month time frames actually look better than maybe the actual chart where you're looking at, where you're like, I don't know, this trade doesn't seem to have worked out so well. This one doesn't, this one doesn't. These two are kind of still, they're okay, I guess. These ones are doing decent, but I think to this guy, it's kind of 50-50, but we have a CEO buying the stock, which is semi interesting. It's not his biggest purchase, so that's not quite as interesting. It's not a huge percent holdings increase. So I would say, it's kind of iffy. It's not a super high signal here, but it's not the lowest signal that we'd see either. Just kind of right in the middle in terms of signal. So I wouldn't qualify it as high signal. Looks like this is just a pretty normal trade here, so that's good. If we go take a look now at, can we see anything here? So we've got some positive momentum. So, stock moving in the right direction. We don't have positive earnings momentum, especially with it falling from positive to negative now is certainly not something you would like to see. And you normally don't like to see, the disconnect between, why is the stock price is going up while the earnings estimates are going down. Not always a great look. However, we are also seeing this is an insider purchase just after earnings, it looks like. So if we look at January 6th, so it looks like they just had earnings a few days ago, which must have gone okay. Don't see any gap ups or anything, but that must have gone okay. If we go look at some historical pricing here, they obviously their earnings are negative now. So I guess their estimated earnings are pretty high on a PE ratio, but again, they're kind of at a weird negative earnings is going to throw some stuff off. If we just go up to EV sales, it looks like they're on maybe the lower end of a valuation standpoint, just historically speaking. I don't know, overall, so far, looking through this stock, I think you would just kind of say some interesting, some not super interesting. We can look at some financial results here. Net sales were up 12%, MedTech net sales up 26%, loss per share, adjusted EBITDA. We had an outstanding first quarter and continue to build off the strong momentum. Revenue up, MedTech growing, medical device growth is flat to slightly down, so maybe not quite as good. Just all their different revenues they have here. Gross margins going in the right direction, which you'd like to see. Adjusted net loss not going in I guess year over year they say it's going down, but looks like quarter over quarter not necessarily heading in the right direction, but could just be a quarterly thing. We don't really know. Positive adjusted EBITDA, again, maybe a little lower, but they say year over year it's up a little bit. Quarter over quarter maybe not. Q1 cash is down quite a bit. So overall, anything that we can say here, they're shifting from its historical product portfolio to focus on large, fast-growing medtech markets. Anything else here? Some guidance. They raised some net sales guidance, which you like to see. Gross margin, they have no significant margin step up, mainly because it looks like they've got some tariff impacts coming in. Adjusted EBITDA they raised. So it does actually look like they're kind of going in the right direction here. As a guidance, here we go, is the guidance raise primarily driven by the mechanical thrombectomy and nanoknife. How should the cadence between these be viewed? Yes, the raise is mainly due to the mechanical thrombectomy. Yeah, basically just saying yes. So overall, I mean, when we just kind of look through all this stuff, it doesn't seem like a particularly cheap company necessarily. So I don't know if it's not really like a value play here. It's not really like a turnaround play. I think you don't normally like to see earnings going down like this, but you've got an insider with decent returns buying the stock. You've got the stock heading in the right direction. You've got it sitting above its 200-day. You have at least a story, you know, they're raising guidance. They're talking about the medical thrombectomy and the nanoknife sales are doing quite well. So you kind of have, to me, this looks a little bit more like a momentum play of just, it looks like top line revenue and stuff is heading in the right direction. It looks like the stock price is heading in the right direction. You got the insider buying. All of that would bode for just kind of a continued momentum, you know, going through the next few quarters or whatever. So all of that, I think, actually sets up for a pretty interesting insider trade. Not the highest signal. You'd like to see maybe better returns from this guy. You'd like to see, you know, maybe positive earnings estimates growth, not some negative estimates growth. So I don't think this goes into the highest signal bucket, but it's definitely at least semi-interesting and probably worth consideration to maybe pick up some shares, you know, based on a little more due diligence and just kind of how it might fit into your portfolio overall. But I think that's a pretty interesting insider trade as well. And then we kind of just get down to a bunch of tiny little trades that nobody really cares about. Switching over to the sales here, let's see, that should all be good. We'll start off right at the top here. We can see Michael Dell selling $1 billion of Dell technology. Obviously a pretty massive sale there, but we will notice that if we look through, we will see that he's sold $1 billion quite a few times here. In the last 13 months or so, he's sold over $1 billion multiple times, which would be these last sales, which obviously sold a little early here. The stock did fall in the first half of 2025, but, you know, not particularly great timing on these $1 billion sales, not a particularly great timing on this $1 billion sale. So I don't know if the $1 billion sales overall are all that notable. He does actually tend to time his sales okay in the longer term, and I mean his buys especially, but he hasn't bought in a long time, but his sales as well. So we can see, you know, 7% stock falls on average 7% in the next 6 months after sales, and you can kind of see not a great grouping of selling, pretty good grouping of selling, not great in the short term, but worked out in the longer term grouping of selling. So, you know, again, another one. I don't think this is a particularly high signal sale. I mean, $1 billion is $1 billion, is a pretty massive sale, but he's sold that much more and it hasn't really affected the stock price or seemed to be timed particularly well. So that's a pretty quick, just, you know, can skip on past that. Magnetar continuing to sell CoreWeave after the IPO, which we've seen 100 times. SLTA selling Dell, which we've seen a bunch of times. Jensen continuing to sell Nvidia as part of his 10b5-1 plan. Just all sorts of 10b5-1 stuff going on here. Taxes, 10b5-1. Lilly Endowment continuing to sell Eli Lilly, which we've seen. This is just a 10% owner. Again, tend to just kind of skip over these 10% owners selling stock. McCormick here, we've got what do we have here? Common stock voting shares, another 10% owner selling the stock. You know, seems like his sell history is actually okay if we take a look. Well, again, another one of those, once you look at the chart, it maybe doesn't look like his timing's quite as good. Seems like decent timing up here, decent timing up here, decent. Kind of 50-50. You'd like to see some better hit rates, especially at a 10% owner, which again, not always the highest signal, so we'd like to see a little bit better hit rates probably if we were gonna dive deeper into that one. Now, Trilogy Metals is kind of an interesting one, which we can look at real quick here. This is probably a good one to end on here, but we can see, obviously, this was the stock that Trump took a 10% holding in, or the US government did. Trilogy Metals soared 300% or so in the last 6 months. As you can see, a massive step up. And then what do we see here? All sorts of insider selling. All these insiders selling, you know, what is this? $7.66 million of the stock, 6 different insiders taking full advantage of the stock going from under $3 to up to $8.40. And when we take a look at their filings, we will see here that they have a bunch of shares, and it looks like, at least for part of the reason that some of these insiders are selling here is because they have shares set to expire, as we can see. So you've got a ton of this worked out for this tranche. At least they got the stock at $1.81 back in 2020, and then, or at least it was as exercisable in 2020, but these stocks were due to expire here by the end of this year. And so literally 2 months before they're going to expire, they shot the stock up from $2.80 or so, which would have only netted them $1 per share, all the way up to $8.50, which, you know, is now netting them $6.70 or something a share. So a nice 6x increase in terms of how much much profit they're able to take from these sales. So big kudos to Trump. I'm sure these insiders were giving them. I don't think these are really high signal sales. I think they're just taking advantage of this Trump pop. And I also just wouldn't really be interested in trying to fight against the U.S. government and the stakes they're taking, as they are very, very keen on pumping their bags and really just pumping the stock market overall. So don't think these are particularly high signal sales. I just think pretty funny that some insiders here made themselves quite a bit of money, many millions of dollars more because of the fortuitous timing of that Trump 10% stake. So you can go to CEOWatcher.com to look through all the insider trades yourself and see what's interesting. And don't forget to like and subscribe, and we'll see you next time.